All right. So I was just going to type it all out, but I'm not gonna lie. I started not feeling like typing it all out after I finished this one. But this was just for the first entry. So what I was saying was price was looking like it was bare just from your screenshots. Just in this area. What I was saying was price created a lower low, a lower high, and then it broke this low, making this internal breaker structure, and which makes this a protected high or a strong high, if you will. This high here. So, with the market expectations, you would expect this high to hold, and this low would become weak right here. So you have a weak low and a strong high. In this scenario. You did get the change of character right here. However, price failed to break this high. So technically this low is weak. All right. Um so that's a weak low. So you're tempted to buy at the weak low 9 times out of 10 should fail because what we're targeting is the weak highs or weak lows for a majority of the time. Or it's a good target because you would expect that to fail or price to go through or whatever. So what I was seeing was, all right, you got your internal breaker structure, strong high, weak low created. You gotta change your character, but price didn't mitigate too much of anything here. So like it did mitigate the imbalance, but it never like, I guess if you use a full range of supply, then it tapped in to a supply zone. But this is a 15 second, so maybe on the 1 minute you have a low, high, low. This would be a internal break. This right here, you have a break there, and then basically it's entry model 8. Um, retest on this pullback candle, and then it flushed down to the bottom. I mean that's on the 1 minute how I would see it, but unless price broke unless price broke this high, or like I said in for number 3, if price came back, and I would wait with this aggressive momentum to the downside. Price created another sell side imbalance, which I would be looking for price to either come back into something like this, come back into and then reject. Or if price wanted to continue bullish, it would break through this imbalance, break this high, give you another internal breaker structure, come back and retest using this sell side imbalance. Or if we created a buy side imbalance, then I would take that entry over this one because this is just Choch and retest, which is a risk entry model anyways. Um, but this would be a double confirmation entry. So you would get that retest off of your initial entry, get another internal break, and then find your entry after that. Because it's like double confirmation. So it's not as risky of an entry everything else. So that's what I would be looking for. Because right now prices give you low, high, low, break, internal break, or a breaker structure on this time frame, possibly. So this is a strong high, weak low. Price came back into this sell side imbalance and filled, excuse me, filled completely, but then failed to break this high. So with that is just entry model one, I think, just a choke and retest, which is risk entry model. So for a more confirmed entry, you would want this retest and then another break in structure here. That way, it doesn't necessarily need to break this high in general before you get your entry because you have a choach, internal break, retest. This low will become strong based off of this break here to the upside. And then you can get your retest and take it back to the upside. That's how I would see, or at least be waiting for the confirmed entry. All right. Let me fast forward it to the second entry, or I'll just let it play. Ooh. So entry two is here. All right. Okay. So what I could see here, um, well, just off the bat, looking at this, I'm like, okay, so I already identified, so like price already bust through here, right? And it came down really strong compared to the up move. Um, where you have all the one big candle and then a bunch of small choppy candles. Normally, when I see price doing this, if I'm looking to buy, I'm more questionable on it because price is weak to the upside with these candles, and then price is showing strong strength to the downside with these full candles. So like this is normally what I'm looking for at my entry for a sale. Like I want to see small candles, price slowing down, not really doing much, even on the lower time frame. Uh, that kind of gives me a little bit of sense of security in a way. It's not guaranteed, of course, because like we never know what the market's going to do. It could go either. Excuse me. It could go either way. But in general, like any areas where you looking to buy or sell, you kind of want to see those small candles forming around your entry. Um so like here, the first thing I notice is because like I would have already had this charted up, right? So if this was my initial entry, which is a failed technically failed demand or supply, then this automatically becomes a breaker. Just for the reason that it was a valid supplier demand zone because of the change of character. Um, so when price comes back into this area, if buys failed, I might test the sales right here. Just for the fact that it follows structure. So like you had this high, low, high, it broke, which is another internal break or break of structure on this time frame. Or you could just say break in structure because I know some people just use BOS for every break, even the change of characters or whatever, which could make it less confusing of what kind of break it is. But at the same time, it's kind of you're not really if you look at everything in like a BOS, from my understanding, it kind of diminishes the value of the type of break it is because like some breaks have more significance than others. So like that's why I kind of like to differentiate between the internal break, change of character, break of structure, as opposed to just labeling everything as a break of structure. Um, but this here was like, because I honestly don't mind using breakers. I like to identify them because a lot of times price reacts to breakers. After a nice break like this, it'll come back where the supply or demand zone is like all the way up here. Breaker is normally like a good 50% pullback or um like from this high, well, to really this low. So the breaker is like a good pullback, 50, 75% or whatever. I could use the fib if you want to. I don't really use the fib much. I more so use the premium discount PD array tool, if you will. So like where you would expect price based off the swing of this move here or this leg. So you have your high. So now you have your new, or you could just use this one. You have your new high here. Use this one. So this is like, to me, this based off of current structure, this would be my technically for now on this time frame, the swing high, and then and I'll backtrack this just a little bit to come into the entry. All right. So you have your swing high. Actually, let me clean this up a bit. So now we here. All right. So now we're here. Um, for the second entry. Um, so this is liquidity, which is a good target. But also from what we've learned from Nez's teaching, uh, we don't really treat these breaks with liquidity as valid breaks. Um, so that possibly would have alleviated that entry, but I'll go over it based off of what you had on your screenshot, where that was your change of character. So um, remember when I said that on the lower time frame, like 15-second, 30-second, I kind of look for a choach plus internal break before I take my entry, because normally on the 1 minute time frame, which what I'm taking my entries on, uh the internal break is normally the 1 minute choke for, like, depending on how low you go down in the seconds. Like 15 seconds normally, I want to say you get your choke internal break, and then your internal break on the 15-second is your choke on the M1. Yeah. See, like on the 1 minute, your choke will be where I have the swing high currently for the M15. I mean, 15-second. So, I think maybe just this liquidity here, would have been a key indicator. However, you did have a what you probably missed, because a lot of people don't use breakers or supply and demand flips, and I personally have seen a lot of times where breakers work every day. So I always mark them up, or like I said, if I'm charting this area and then I get a nice break, because this is technically, I guess you could consider this a breaker structure, right? On this time frame. So now you have a strong high and then a weak low, and nothing really in between here except for this area, but this area does have that liquidity there. Um, so that's just another thing to be careful about. Honestly, lately I've marked liquidity, but I still kind of ignore it. So I probably would have looked at this like, okay, um, maybe this is a change of character, but because of the liquidity, I expect price to blow through it, right? So like that's good. Got the good reaction I wanted. Even though I assume that this is a change of character. Price came back down, and it came back down aggressively. And plus, what I can see here is you got a high. This is pullback, so technically a low, because it came lower than this candle. So high, low, and then this is the lowest point, and then another high. So technically, this is a change of character, I would say. So that's a change of character, and then you have this here, where it came down low, pulled back high, and broke that low. So this is a another internal break. So you got another internal break there, making this a technically protected high or a strong high, if you will, or because this is protected by this internal break here. And once again, this low um didn't break the high that created it. So like in that sense, that makes this a weak low. As soon as you start getting this pullback and it didn't break this high, this is a strong high, weak low. Because price broke this low that created it. So this is a protected high. But price failed to break this high that created this overall low. So in the grand scheme of things, this low is expected to fail once price comes back down without breaking this high. There is a chance that if this was a valid change of character, that price would do something like this, where it would come into your entry, give you another break here, and then maybe use this area as a breaker and continue to break that high. So this is what I would be looking for is for this internal break to occur to the upside and then utilize this failed supply zone as your entry to the upside. That's what, and then you would take your entry here as opposed to taking your entry in this area because you don't technically have that double confirmation. You just have the single. If you wanted to count this break as a full choke, which it could, because sometimes I see price going like if it might have some liquidity in this location, but it'll continue running up, or it'll give you that perfect, you know, break, retest, break again, and then just keep blowing through uh weak highs or whatever or supply zone. But that's in general for the second entry, what I would be looking for, especially with this excessive downside momentum. But of course, like this is all it's easier to uh identify shit after it happened. Like I could sit on a chart and tell you why price did this based off of SMC all day long. That's no issue. The issue is being able to do it while the market is live, and even I definitely still struggle with that as well. Like I miss my entries all the time, uh, because sometimes it's hard to actually see what's going on, which I understand because like we both doing this, and I like it's just easier to break down what happened after the fact. So like that's why it probably seems like, oh damn, you know. And then so that's that area. All right. Clean some of this stuff on. That should be enough. All right. And then I'll let it play out some more to get to the third entry. Um I'll let it go until it hits the point to where it failed. Okay. All right. So this is entry 3. Let's see. Okay, so you just use this candle here. All right, so that was your entry 3. Then I'll just bring this on back so I can delete that. All right. So for entry three, this is what I was saying that because like after the fact you can kind of just see like, oh damn, uh I wish I would have saw that when I was, in the shits. But so what I was going back to what I was saying. So you had your change of character, which is clean, nice, aggressive or excessive candle to the upside, which was perfect. Nice price action there, and then it came back down into your intended zone. Nice reaction. It gave you internal break right here. All right. And then, but what I saw when, like, just glancing at everything was so you had this here, right? That was created from the prior um, supply, which is technically a valid supply or the supply that you would want to sell from, because of this action here. So, like, price created this choke and then immediately retest. So like this supply here is already mitigated, right? So price already mitigated this zone. And this is another uh breaker structure, right? On this time frame. So you have low, high, low breaker structure. Change of character, internal breaker structure. Internal breaker structure mitigated this extreme supply zone, if you will. I mean, technically, you could expect for price to come and tap into this. Uh, what's it called? Shit, I can't think of the word right now. But it's basically just the more the refined supply, where you just have like this order block here. But your bearish order block would be pretty much all of this, these three candles here. So either way, it still mitigated whichever range, except for the super refined. But this is a 15 second, so like I don't know, maybe we're still gonna tap in. Alright, yeah. So like M1, for instance, this is the it mitigated this order block here. So it's already been mitigated, is what I'm trying to say. So like expecting for price to come back into this zone, um, you would expect for it to fail, right? So if you're looking for buys, um, and price is reacting off of the discount, if you will, then I would expect for this low to fail because it's continuation, right? So when price taps into here, which would be ideal for entry to the downside because you have mitigation that makes this a valid supply because it mitigated. Not only did it mitigate, but it also created an internal break, which made it a strong high on top of breaking the overall low. So this pullback was responsible, if you will, for breaking this low. I mean, I do see this little pullback here, but it's not much, right? So like It's it is the reason why Price gave you your choach and then a nice retest because it it is a pullback. So that's why you got the reaction you were looking for. Um, so I guess in general, since you could say that this pullback broke the overall low, is why it was valid enough to give you that reaction to go back into your intended entry, and then it created a. I guess you could say this is internal break here as well. So you have your choach internal break, and then another internal breaker structure, which is why it continued to the upside after the retest because this is a protected low now, and then this is also a protected low. So you kind of got your full break based off of the high that created this low, if you will. But this is still the overall high that you want to go for, right? So this is now after this break, this is your new swing high. Your new swing high, and your current, well, it's not current because it's broken, but your was at one point swing low, right? So then you have your discount versus or your PD array, and this is well within your sell zone, right? So like, um, so you would expect price to possibly react here because you have your breaker structure. This is a valid supply zone because it mitigated what was above here before even breaking this. So this area has already been mitigated. So 9 times out of 10, after something's been mitigated, if price comes back into it, we expect it to fail because it's like going to a store that's already been emptied. You can't really go and buy more stuff, or it can't get that fuel that price that they talk about. There's nothing to grab here if it's already been mitigated. The that trip to the store has already been completed, and they no longer have what you want. So price will continue to go to the next supply or store or whatever you want to call it if you want to look at it in an analogy standpoint. Um, so this would have been a valid entry. At least I would have after the first fell. I think this is the third entry. So I would have felt more comfortable taking the entry after at least this internal break, but definitely after this one. So, but my entry would have been more in this area because that would give you your double confirmation. So I probably would have entered here already, or been looking for my entry there, and then I probably would have entered, and target would have been TP1, TP2, etc. Maybe take something off here. I would have targeted this. This looks like relatively equal highs, so some liquidity there plus imbalance. Always looking for price to fill imbalance uh, as a target, and then so yeah, it was just already mitigated. You had this breaking structure come back, mitigate this supply zone, and then it broke. So then you have another breaking structure. All right. And then let me pull up entry 4 and 5. But then, but also, so like you could kind of see where I'm going. So like now with this break, this is technically your new high, your swing high here for this structure, right? So your new swing high, and then let me get that pulled up for the entry 4. All right, let that play out some. All right, so price tapped into your extreme demand for the M15. Maybe it went a bit lower. Trying to find this long wick candle to the upside. No. Okay. Hmm. Oh, okay, I see. It was the 1 minute. Okay, it's showing on the 1 minute. All right, that makes sense. I was like, why can't I find this long wick? But I'm pretty sure it's in this area somewhere. Okay, so okay. Hmm. It kind of changes things a little bit for the swing structure wise. All right. So you had your change of character here, and chokes there. I'm gonna just hide this for now because it's in the way. And now whatever the hell this is. Oh, oh yeah. That was something else I wanted to mention as well. Like I didn't see you mark your on the M15. You didn't really mark your swing structure. Uh, Like you marked your breaker structure, but your swing high, swing low, internal low. Because also what I was noticing, like, so technically this is your M15 choke, technically. Once price broke this low, you had M15 choke. So technically price could pull back, which is possibly what I was thinking that you were expecting to buy into, maybe like this supply area or something like that. Uh, but since all this stuff has been super bullish the last couple of months or whatever, and just breaking all-time highs, I understand why you just looking for buys. That's why I've been kind of timid on hopping into futures because I'm gonna start doing that this week. I'll be trading S&P 500, which is basically the same as SPY and all that other stuff. So like I'm a little antsy on or iffy on getting into these these markets that's at all time highs because it's no really like what Nez said in his breakdown. There's nothing on this side to the left of the market to give you indications of areas to sell from. So like you kind of got to just wait for price to form something high, low, high, break, come back, change the character on the higher time frame, wait for the pullback and all that good stuff, and then just kind of scalping or trading the internal price action until you get something more solid and it comes back down and all that stuff. But anyways, so Uh, where were we? Entry four. All right, and then this was your intended entry. So the breaker didn't really work for this one. However, you did get this little pullback here. Um, this high low. Yes, ugly. All right. So like you had this low, high, low, high, low. I don't like that. Low, high, low, high, and then low. So this area of consolidation, sometimes can, from what I've seen, work as a sup- supply because it's a buildup of orders, right? So, and that's all consolidation really is, right? So, it could be a strong selling or buying point where price consolidates and then breaks out. You would expect for it to come back, retest, and then continue to whatever side that it broke out to. Naturally. Let me clean some of this up because it's getting a little messy. Nope, don't want to get rid of that. Nope. All right. I'll just keep it like that. All right. So then you have this area of consolidation, but really you have a low, high, low. So this is like minor break right here. So you can say that's the internal breaker structure to the downside. That was the wrong one. And then let's make that to the bottom so you can see more clearly. All right. And then that will give you this area here as your supply or your entry, right? Based off of this strong high that was created from that down move. So this high is protected. Or if you want to be use a larger range, you could say that this is your range and this high is protected. Depending on how refined you want to do. I personally like smaller entries, so I would go for this pullback and break, which gave you a nice imbalance to the downside, which was filled. And you also had a mitigation occur from this low, high, low break, imbalance, fill, retest on this supply, which gave you a nice reaction as soon as it tapped in. So, like, mm, to me, that just makes it a bit more like, so technically, you could use this entire zone because this was mitigated by this candle here. And mitigation creates confirmed or stronger zones, right? So like you want to buy or sell off a zone that mitigated something, because if this didn't mitigate this, then that means this has no purpose. Like yeah, it might imbalance fill, but without a mitigation of your supply and demand zone, 9 times out of 10, and Kobe touched on that a bit in the videos that I showed you, which was my aha moment, right? So what he was saying in the videos, let me see if I can find an example. So like right here, what he was saying in the example is lows or highs that typically just feel imbalance. Um, you expect them to be broken, right? Because it's not really mitigating anything, especially if it doesn't feel imbalanced completely. Like this high was broken. It it felt imbalanced almost to the 50%, which most people would look for. Um, make that a little bit. So it felt this imbalance here, 50%, which is what most people look for, right? However, it still was broken because it technically didn't mitigate anything. Like it filled some of the imbalance, but it didn't fill 100%, and it didn't mitigate into any supply and demand zone, which led to it being broken later on after price broke this low technically. So like the imbalance worked to push price down to break the low that was pushing into it. However, since the supply and demand was never mitigated, price continued to go back up after it broke this low. So like when you watch his video, on the I can't remember if it's in the first or the second one, where he touched on that a bit, but that kind of was like the aha moment for me, where I was like, okay, the next couple of days I'm gonna monitor price and see like how it reacts to breaking highs and lows that don't fully fill imbalances and don't mitigate anything, and kind of figure out how I want to use that in my trading plan, right? So yeah. All right, back to this one. So like you already have a breaker structure, and then you had this minor pullback, internal breaker structure, but this overall supply mitigated this overall supply, which broke this overall low. So it's just kind of like continuation, mitigation, continuation, mitigation, continuation. So after, like, that's why I was saying, like, after the first two tries, after you get an actual break, as opposed to it just like stopping you out and then breaking the next high. When it's like this and it's continuous breaks, entry, well, yeah, uh, yeah, entry one, entry two, entry three, somewhere. along those lines. Yeah, entry one, entry two, entry three, where it's just continuously breaking. Um, I would kind of try to look to change my bias a little bit, at least until maybe like if I'm scalping, I'll just do all right, this low's weak. I I've identified that after, well, not even because that's the second entry, but like after I see price come back and it's tapping into like these zones here, and then it's like failing to break, then I'm kind of like, okay, so maybe I need to look for sales, or I'm just done for the day. Because more times than not, what's happened to me is like price will do this, but then it'll turn around and not break anything. Like I'll start looking for sales after this, and then I'll get screwed and price will come. I might get break even, right? Because I'll take an entry here, and I might get break even, and I'll be looking to like, well, sell deeper into the lower demand, or maybe since price keeps breaking, I might target this actual low on the M15. Um, but for me, what normally happens if I'm like looking for buys and it's failing like this on like the 1 minute or lower, and then I'm like, okay, well, I'm gonna just take the sell because it keeps selling, and I'll just wait for a pullback, and then price will come. I'll get break even, so I got a little change, and then price will break this low, and then just come back up and just destroy my stop loss, and take me out. So that's why I just kind of like, if my bias isn't holding after a couple entries, then I'm like, all right, I'm done. I don't want to switch my bias, and then once I do that, then price decides it wants to buy up like I intended for it to do, but it just wanted to dig deeper into a higher time frame demand, or tap into a lower time frame demand, or whatever the case may be, a more super refined BS, or just sweep like some liquidity or something. Because like technically, from what I've seen or learned, like I'm pretty sure that it was some news or something that occurred here, creating this long ass wick. And just like in the past, from what I've learned is that these long wicks, price will take them out eventually. So I would, when news occurs, I typically, if I even decide to like look at the market, if it's like this crazy just jumping everywhere, um, even if it breaks this high, uh, a lot of times price looks to clean up these long wicks, just like it happened here. When I'm sure that I don't have the news turned on because it's just too much on on the chart, but like price cleaned this wick, even though you had internal break, it still wick this low, which technically should have been protected because you had this high, low, high, low, and then this high was broken, giving you internal breaker structure. So this low technically should have been strong. This should have been a strong low, which it is because price never closed below, but price still wicked it. So like everybody getting stopped out. Smart money retail, everyone. So like that's something I would be more cautious of with these long wicks, because normally price is looking to fill because it's kind of like an imbalance, in a way, I think, or just can be viewed as liquidity, when you have such a long wick. Um, because it's not regular price action. Like you want candles, minimal, like smaller wicks, but normally like the wicks always end up in liquidity. Even this is liquidity. Like Head and Shoulders got wicked out, right? All right. Hopefully this recording is not too long, and I can still send it to you. Shoot. All right. So entry four. But it just basically, at this point it was mitigation and continuation. Um, so like same thing with here. Like if prices just continuously, oh shit, if prices just like continuously falling and this pullback break, pullback break, pullback break, I definitely would want to see a change of character, internal breaking structure before enter, because I would have to have additional confirmation before entering because it's just too risky. Price is already dumping. It's been flushing continuously, and just going in on the buy after a change of character is really risky. Really risky. Because prices overall in this short amount of time, the upside movement and the downside movement momentum is favoring the downside every time. Just looking at the candles, like you got smaller, choppy candles going up, nice, full, pretty candles coming down. Small, choppy going up, nice, full coming back down. Small, choppy going up, nice candles coming down. So, like, price did start slowing down around this area, kinda, and then it picked back up. Nice, full candles coming down. So, like, and then you have like these long wicks here, um, like this one here, which is a strong sell indicator, right? Because I think it's called a hammer or something like that. Oh, even this one, like I was saying, with Nez's, not Nez, but Kobe's that recap for the community call, like this high only filled the imbalance, right? It didn't mitigate anything. It only filled up to the 50%. Yeah. But then later on, it still broke this low, but this high was still broken for price to mitigate this supply area here, right? So, um, this this high was expected to be taken. If you look at it in the aspect of um, highs and lows that only mitigate some imbalance, but don't mitigate a supply and demand, is weak or is expected to be taken out with later price action. Um, and that kind of just, and and the same thing, kind of like this one as well. Like this only filled imbalance, this low here. Like it only filled imbalance, but it didn't really mitigate. I guess you could say that it did here mitigate Like if you were going for a entry model 8, price broke above this high, which was aggressive candle to the downside. So like you had this break here, right? You had that break and then your retest. So technically this area is already mitigated in some sense. This area has been mitigated. Now you can try and go for the more refined entry, but overall this order block, this buy buy side or whatever you want to call it, this buy order block um is mitigated. Price gave you a change of character, but this was already mitigated. So therefore you wouldn't really want price to come below this low anymore, right? Because this area is mitigated. So you would look for it because it gave you a little um high, low, high. So like there is technically a form of internal breaking structure here, right? To the upside. So now once this low is broken, technically this is your change of character to the downside. Because you had this high, low, high, some consolidation, mitigation, and then you play it forward. So you got your change of character here, right? And then price created this high, oh, low, high, low, high, low. So technically, this high should be a strong high. And then you have your change of character to the downside, right? And it immediately after giving you the change of character, it tapped back in to mitigate this zone here. This zone here, or on the safer side, this zone here is mitigated. And then you have nice, strong movement to the downside. So, like this entry, I wouldn't even chance it. Not with these candles, not with this candle, anyways. I would definitely need to wait for another break of either this high for a break of either this high here or this high to give me another, which is kind of, it looks like, let me see, uh, 515.27. Okay, so not this high because this high is equal highs. So there's liquidity there, which technically could give price a reason to buy back up, right? But and this is why I started kind of ignoring liquidity, um, and just kind of watching how price acts in that area. So like, because I don't think price ever came back up yet. Um, I don't remember what price does, but this is still a valid supply zone, right? Because it mitigated this supply zone, making this valid. So like as long as price doesn't break above this high, then in my eyes, sells I would still take the sell entry. It's and I would have my stop loss maybe here, but knowing that if price comes close to this, it's 9 times out of 10 gonna break through. So I wouldn't even put my stop loss there. Maybe up here, but then that's pretty huge difference. Like if I was gonna go for this entry, I would go here or maybe here, but I wouldn't put my stop loss here. Just for the simple fact that it is liquidity sitting there and I don't want to become liquidity. So at the very like this is pushing it. This and this is pushing it, but these would be the safer locations. But I would go for this, and if I get stopped out, oh well, small stop loss or here at the most, just to give a little wiggle room. But anything higher than this is, liquidity here. This is just too big to even consider, So, but I've seen people with stop losses like this. Nice one for one. How can you lose? Right? So, so yeah. But it's just a series of mitigations and then continuations. And like it's understandable. I probably would have missed this too. To be honest with you. Maybe. If I'm looking for buys, then I wouldn't have seen all the sales because sometimes I try to not mark up both sides because it's a little confusing sometimes because you see the sell opportunity and you see the buy opportunity and you don't really know which one to take. So I just try to kind of mark up a little bit of both sides. Like I'll mark up supply and demands, but I'm not marking up like everything. I'll do breaks and supply and demand uh, because I want either the supply to fill or I want the demand to fill. So if I know where the locations are, then I can still kind of, monitor price action when it gets there because it'll tell you, right? Like it'll create a change of character and you can say, all right, I'm done with this trade. It's coming back to my entry. Or, all right, this is definitely going to continue pushing up because it's just continuously creating these breaks, retest, break, retest, break, retest, and mitigation. So, like, if price comes back, you don't expect it to hold because it's already mitigated everything, and there's nothing to really hold the price. So it's just going to keep searching higher for something that's not mitigated to give it that reaction back to the opposite side, right? All right. So yeah, that was entry 4. And then let's see. Entry 5 was on the 15-second. But 15-second entry on this one wouldn't have been terrible. Like if you took a breakout because on the lower time frame it did give a nice push up, internal break, maybe take an entry here. Um well, let's see. Because you had low, high, low. So this is technically your change of character right here on the 15-second for entry 4. So you had a choke here. Um, so technically you could have used the same zone off the rip because you had a choke, and then based off how price looks, you had choke. It came back down into your zone. And then I would have took my entry off of this candle when I saw it. I probably would have entered somewhere manual entry like around here, possibly. And then stop loss is 15 seconds. So here or here. And then I would have been targeted TP1 because this will be your internal break if you took it off the choke on the 15-second, or TP2, TP3, and so on. But or I would have had an entry here, right? And then at the very least, I would have taken partials, um, entry here, stop loss, and then, target the upside. Once I saw that price failed to break this high, I'll take my partials, go break even. Because if price comes back down, then at least I have certain amount off for the trade and I'm not gonna lose anything when it comes back down. Or depending on how large I entered, I would just leave my stop loss here because liquidity did form. So I would kind of expect price to go back up. So what I would do is I already took a partial, um, but depending on how much my loss would be if I maintain my stop loss, like say I took a partial and then like my partial was 50 bucks, right? My initial stop loss was 50 bucks. So now after I took my partial, I got 50 bucks profit and now my stop loss is smaller because my position is smaller. So like my stop loss goes from 50 bucks to now is like 20 bucks. So I'm still 30 bucks in profit if I let my stop loss get hit where I originally had it set. So like sometimes if it's like that, then I'll just leave it and you know I'll eat the loss because it's a small loss and it's a smaller loss than what I was already intended to lose. Plus I made some profit, so I'm coming out on top and just going break even. Sometimes I don't like it if it's not like a full push to the upside that's like crazy, you know, where it's like, okay, this should be safe to at least bring my stop loss to break even. Where I don't, if price came back down, then I've already taken a good amount of profit to where, you know, but I situational dictates, right? So like, if if I didn't take profit and prices being a little iffy, um, then I'll just go break even. If I didn't take profit and it's like running up but then it comes starts coming back down, I'll just go break even. So that way, and probably take a small partial, just to cover the commission, and I'll just let it fail at break even, and probably close my computer for the day. I mean, depending on how many times I already attempted to enter, but yeah. So let me clean this crap up and then go to entry 5. I do have a feeling like this is going to be too long, to be honest, but I'm gonna try. All right. If anything, I'll try to chop it up into sections. Um. All right. Entry 5. Let this play. Starting to get into entry 5. I'll just stop it here because this is where your entry and stuff occurred. All right. So your chocha's here. I did not click that. All right. So we had choch here. Yeah, this would have been way too much to type. Yeah. All right. So you got Choach, 15-second Choach, and then you had your entry here, which was solid, I would say. That's a decent move to get some nice profit. You know, you got an internal break, all types of liquidity that formed here, sellers in the market, um, sellers here, you know, take out sellers, and then price will do what it does after that. But so you had your Troach, nice entry. Um, but what I can see here is that this was technically a break of structure, so making this your current swing high. And I'm gonna just also delete this. So, well, I'll hide it. I'll hide this in 15. Actually, what I'll do is lock this to this interval. All right. So your entry is here. So technically, for this move, this is your swing high for the current structure. Swing high, and then your swing low after you get your pullback and whatnot. All right, and then so you take your PD array, premium versus discount, all that good stuff. Why is that there? All right, and then so at this point you have very bullish, I mean bearish price action. Right, you got another break of structure here. Uh, a bunch of weak lows, strong highs. There is some liquidity here. There is liquidity here that price felt this week. All right. And then, so like even here, you have high, low, high, price pushed up. Um, change your character here. Change your character. I'll just go through internal break, internal break, and then you had another change of character to the upside. Which price did it break this high? All right. Price felt to break this high, right? I mean, it broke, so you had a break in structure, but it's not a break of structure because it didn't close above. But technically, it did sweep or break this high. So, like, this high is strong, and then you also had after this another, if you will, change of change of character. Excuse me, change of character or internal break, depending on how you want to look at it. Like, this is technically, you had a choach here, choach, and then choach. Right? So like prices favoring the downside. So that would make this a valid supply, being that it swept or broke this high, basically mitigating whatever was up here. Something to the left side that wasn't mitigated, I'm assuming. Oh no, that mitigated. It just was mitigated with some liquidity or whatever. But either way, it technically broke this high, right? So, and that just goes back, people using wicks for breaks and not for breaks. and not using wicks for breaks or whatever. But this is still technically a valid supply. On top of the fact that it broke this low, so now this is a strong high. Um, I'll just do these. So now this is a strong high. And this low is your swing low. So you would be looking for this low here, this low here, let me turn this off, to overall break this high, right? So you have choach internal break here. So internal break, and then you get a, for what it is, you get a choach here, or you really don't get your choach until here. But then you had this liquidity form here to the downside, but then there's also upside liquidity, which is why price took this out. Is this equal? I think it might have swept this. Yeah, that swept. Okay. But it's still relatively equal. So like you could call it liquidity, even though this high is a little bit higher than this high, but it's still by a decimal. So it's like relatively equal highs or lows, right? Um, so this supply zone was tapped in, but this was not. So like you could say this was the initial supply that pushed price down, or if you want this entire zone, because there was a low, high, low. So this is a fractal internal break, making this a valid supply. Or here, so like it's so tiny, you could kind of just combine this whole area, right? Um, all right. So you have this internal break. Price came back in, just wicked this area, but then it came back down, essentially giving you uh some more confirmation to the downside because this was your choke here. All right. But then you had continuation back to the upside after you got your mitigation off the change of character, which was after getting that choke internal break. Yeah, it closed below this, which was technically a strong low, which is why price reacted and pushed up, but it failed to break this. So now this is a strong high, and this is a overall weak low. Or no, this low isn't weak. Here, this low is not weak there because it broke structure, right? So this is a strong low, but this leg here, you have a this high failed to break this low. So now you have a weak high. This low failed to break this high. So now you have a weak low. So weak low is taken, tapped into your entry, gave you a change of character, which was a little bit of confirmation that price was going to go back to the upside. And then price came back down, giving you a internal break here. So, all right. So you had an internal break here. To the downside after getting the chokes to the upside. So that made this high strong high, which is why it came back, or no, excuse me, this high, your strong high. Because at the time, this is still weak because it hadn't broken this low yet. Um, all right. So now you have this high here, which is now a strong high because of the internal break. Strong high, which led to retest in this area of consolidation, and then overall broke this low that was weak because it failed to break this high here. Because this low failed to break this high is weak. So weak low, strong high. If Well, yeah, strong high because it broke this overall low. So now this high is protected, and which is why price came back into this zone here that mitigated. Where is my that m- that mitigated this zone here. So a series of mitigations, right? Um, so now you have this weak low, which is why it was taken out here for another internal break, right, to the downside. And then let me just clean this up a bit. So like again, this high, I just saw it. So this high only mitigated tapped into this imbalance here, right? But it never tapped into this supply, which led to it being broken later on. Also, because it did not break this overall low that created it, so it's a weak high, right? So that's why it was still a valid buy entry off of this order block because this low created this high. Um, you got to retest, and then since once price starts going back up, I more so look for these highs to fail, right? Or at least supposedly, even though this is still bearish, still overall bearish, right? But being that price came down, went up, came back down, and then started going back up, I would at least target this high. And that would be your well, I guess you could go break even sooner, but overall this would be like a break even location because it's a decent move and it's an internal, like overall internal breaking structure. Like all of this inside of here is just fractal, right? Because it's internal structure. So I guess that's what you would refer to as what fractal is now. That we've been learning it a little bit. Um, so like you have your overall swing, and then this is your internal high, and then your internal low. But everything, these highs and lows in between your internal is your fractal. From my understanding, it's like fractal price action. Um, so overall, what you're looking at is high, low, high, low, high, low, high, and then some gibberish. You could call this a pullback if you like, but it's all just really just high, low, high, low, high, etc., etc. So like this part is not really what I was trying to touch on, but more so just this part. So you have your swing for this time frame, your swing structure, high, low. So you swing high, swing low, and then the pullback, right? So this is your internal high, and then this overall becomes your internal low because it's high, low, high, break, this high, break. So this is now your overall internal low, which would be internal break of structure. And then you would look for another entry in this area, right? Oh, that's too big. Technically here, because you have high, low, high, this is protected low. But on the safe side, this entire range, however, there is liquidity uh, below here. So this is why this would at least be a valid entry because you have your choke, internal break, all this gibberish in the middle, another internal break. You look for a retest and entry and target at least this high because it's a weak high based off not breaking this low yet. But it's still a protected high because it broke this low. So this high is weak. This high is still strong. I'm sorry. Because it broke this low. It broke the low that created it. And this low is still weak because it did not break the high that created it yet. I'm not sure what happens after this portion, but oh, it keeps selling off. So like yeah, it just came back to mitigate this supply fully before continuing to the downside, which makes sense because it technically uh based off buyers and sellers, right? So like um I would rewatch that video as well. I really um learned a lot from it. It's in the course for the paid membership. Buyers and sellers is amazing once you really get the hang of it. I kind of learned a little bit, but like normally after sellers are taken out and price is bearish, it'll flush. And the same thing that happened here. Like price took out all the sellers here and then it sold off. Price took out all the sellers here because, technically upside wicks are sellers in a sense. And downside wicks are buyers. So in a bearish market, you kind of want to see price take out a high or at least wick highs because that's stop losses and all that stuff. for sellers where sellers enter, and then if you see like a nice flush after that, it's like okay, price took out all the sellers here, um, in this area generally, all these sellers, well, not all the way up there, but these sellers here, and then flushed to the downside, and then the same, price took out buyers because people buying from down here, on the breakout of this long candle and all that stuff, retail, good retail pattern and whatnot, and then took out buyers and then shot up because there's no buyers in the market, if that makes sense. So like price take out sellers, it'll flush down, price take out the buyers, and then it flushes back up because it might be looking to buy to tap back into like this supply area here and whatnot. But yeah, for those 5 entries, that's just kind of why I was saying like, I don't know, price was looking pretty, bearish to me, or structure wise, because you kept having break and retest, mitigate, break, retest, mitigate, and all that good stuff. But yeah, that's kind of what I was looking. And then yeah, I know this is probably way too long to end up sending you now. Uh, okay, and then you said so like what you said here, you said I watched his video response and I'm thinking that the main issue for me that Professor Nez pointed out was the 4 hour choke. Granted, there were other things, but that 4 hour choke was the big one for me. Had I known, then I wouldn't have taken those trades, which makes sense. You would have been looking for sales. Um, my multi-time frame analysis is rather weak. I have a difficult time of trying to figure out where price is going to go when I look at the daily 4 hour and 15. So I believe, well, I guess I need to keep in mind that the higher time frames are stronger. Yes, absolutely. Yeah, absolutely. The higher time frames are going to be your bread and butter, and then the lower time frames is going to be your how do you call it? Like your toppings or your condiments, per se. So like you want your meat and potatoes from the higher time frame. That's what's going to give you the best possible outlook of where price is looking to go. But then use your I use my 5 minute more now, lately, and the 1 hour. So I kind of use 1 hour, 15, 5, 1, and then so on, for my daily plays. Cause like looking at the daily time frame, it doesn't really give you much unless you're looking to swing. I normally just kind of glance at it because it's not like if you're looking for day to day, scalps or intraday plays, daily time frame is only going to give you so much. Like, of course, mark out your supply and demand, on your daily. So, like, when prices tapping into supply and demand zone on the daily, which is a strong area. Whether it broke structure to the upside or the downside or not, 9 times out of 10, your daily supply and demands will give you some sort of reaction. Some stronger than others. However, once you tap into something on the daily, even on the lower time frame more so, you're going to get a nice reaction. Just because it's a supply and demand zone, and 9 times out of 10 is somewhat valid. Uh, you know, 4 hour. I used to use the 4 hour a bit more. I I mark it up, but I don't really look at it every day. Because I just don't see a point. Eh, for the 4 hour, you have how many? Like only so many candles, right? So it doesn't really give you a lot to go off of day to day. But that is where you still mark up your supply and demand, your internal breaks, change of character, and all that good stuff. Let me do this so it's a bit more clear. Um, still can use- oh, I do. That's annoying. But yeah, so like I would still mark it up, but I don't look at it as often. I more so look at my 1 hour for my higher time frame bias because it just kind of shows a little bit more um to my liking. It just breaks down the candles a bit more for the 4 hour, right? So like it's a bit more structure to kind of play with, but it's still a higher time frame and it's still strong. Like a lot of times just using the 1 hour as my higher time frame, I don't even look at the 4 hour in the daily for most days. I normally just do 1 hour, 15, 5, and 1. And if I want to try lower, then I'll do the seconds time frame. But mostly just those intervals 1 hour, 15, 5, 1. Um, and yeah. So like here at this point here, I would no longer be looking for buys. I would monitor price, but overall, I would be looking for sales because M15 choke pretty significant, right? So because it's that middle time frame, and that middle time frame is pretty strong indication of where price is looking to go. Either to buy back up or continuously sell. Yeah. And I mean, you can use this as an M5 choke. Technically, it is a pullback. However, I mean, technically, yeah. So like because it didn't break this previous high here to the left, and it only went down. So like you can kind of say that this is pullback on the M5, and you utilize that as a choke, as a more risky choke, and then you had your retest on the supply, and then price flush down. All right, so like it was a lot of indication that price was looking to continue selling, but overall, I mean, breaker structure, internal break right here. Price failed to hold here, so you automatically get a change of character once that closes below, or even wicks. I like to use the wick for change of character. So the only type of the only type of buys that I would be looking for in this scenario would be counter trend, right? Because the current internal, so like overall swing structure is bullish, right? But internally we're showing bearish indications. So at this point, taking buys would be more of a counter trend in a way to push price back up into maybe uh, this zone here, or maybe to fill imbalance here. You can kind of use this whole range for imbalance. Maybe to fill imbalance here and then continue to the downside, right? But it's hard to say because uh, it's at all-time high. So this was the all-time high that it broke, right? So like, it's nothing to say like, okay, price is reacting off this supply and it's selling to break this low, right? So that's why I kind of mean like why I'm more nervous about trading when price is bullish at the all-time highs as opposed to waiting for, pullback, break, another change of character, and then I have something to target, right? And then you can uh react based off what price is doing. So give me a choke here, and then I'll take the retest when it comes back down to buys into this imbalance, this supply, or overall targeting this high since price keeps breaking all-time highs. Um, and then you said on the 4 hour. So 4 hour swing bull. Yes, yes. I'll just mark this up real quick. Um, start this from here. Yeah, breaker structure, bull, another breaker structure here, bull, and then you had your demand zone here. Okay, I see what you did. Basically, this whole range here, because you had two separate, one here and one there, and I did not click the. So you had one here and then one for the wick. I'll just use one entire demand. And then you had another zone here. I guess it was more so this. Okay. So, and then you had some liquidity marked out here and here. All right. And then you have Coach marked here. All right. Which is technically correct because you had high, low, high. Because price technically opened, went up, shot back down all the way down here, and then went back up. So it looked kind of like this. Price opened, shot up extremely high, came back down, and then closed something like this. And then the next candle came in, went up, came down, and then came back up just a little bit, and then closed. So yeah, um, definitely choke here. So had choice that caused price to go down, which that screwed me over on F15. All right, so let me look at F15 from here. Let me go back. I need to backtrack. I think. Oh no, this is current price action. Yeah, that's current. All right, so you did have this choke here, but like I was pointing out earlier, you also had this choke that occurred on the F15 here. Right. So at this point, price technically broke, gave you choach, and then used this failed demand here, which was technically your initial POI one. So this was your first POI. It used this as a breaker on the higher time frame. And then continue selling. So like you see how you got your choach here, and then this failed demand zone became the area that pushed price back down after it came back into it because price broke solid full body break, full body, big body break, and then it came back into this breaker or felt supply and demand or supply and demand flip, whatever terminology that you're used to, um, and then continue to give you a full on breaker structure to the downside. Right. So that's a bit what happened on if like from the 4 hour choach technically is your M15. Did I mark that right? Yeah. So that 4 hour choach technically is your M15 internal break, if you want to call it that. This could be internal breaker structure because technically your swing low is still down here, right? Overall swing action because this low is responsible for breaking this high, which created this low. So this is your full on swing structure, right? So like swing low and swing high because this is just continuation. So this is more so kind of like I would say for me internal break if you even want to count it as a break itself because of this liquidity of equal highs sitting here, right? And at what we've been taught is, highs and lows that have liquidity kind of invalidate structure, right? So this technically not as big of a pullback as this. So I don't know if I would classify it as a full breaker structure. Looking at the overall, you know, picture, I would probably more so say if I was to label this, I would probably consider this internal break. Even though it is, high pullback, low, you can validate it as a breaker structure, but it's not the same as, these pullbacks here that occurred and what you call breaker structure, which I would 100% agree with. Um, so it's not really a swing. I guess if you want to zoom in, only use this area technically, then yes. Breaker structure, swing low, swing high, breaker structure. But overall, zooming out, um, breaker structure, swing low, swing high, internal breaker structure, um, and then internal breaker structure, right? Which at the same time, this was also like as you're marking up your demand zones, this demand zone technically became another breaker, right? Even though you do have this high, low, high internal break here, and then the supply zone was created, price came back in, tapped into the supply, and then continued to the downside, right? Because this is a weak low. So you expect this low to be taken. And maybe price just want to, continue to come back down and fill all these imbalances. And then you might get a reaction after this low is swept because of these equal lows. So you might get something like this. Price come down, sweep these. You get a reaction in this imbalance here to push price back up a little bit. Maybe tap into something, it probably created like something like this, right? So like it'll come down, break these lows, um, you know, break these lows here and here, maybe tap into this imbalance here or here, come back up, tap into this breaker or this consolidation area, tap back into there, you know, give you something like that. And now you have a internal break. Come back in, take out this liquidity, uh, tap into this imbalance, fill, come back up, maybe fill here, I don't know, sellers. So maybe it'll push it back up here, and then continue down or some shit like that. Sweep, sweep these lows, all this liquidity down here that you identified as well. Maybe tap into like some random ass demand zone, and then it'll push back up excessively once it takes out all the buyers. Because these are just buyers, right? So like price wicks, these are buyers here, buyers, right? Price took out buyers. Once price took out these buyers, flush to the upside, right? And then the same thing. So now price is coming to take out sellers. Price took out sellers up here, People that got in the last time it started to flush. So now price is taking out all these sellers, right? Sellers here, all in this area. Price took out these sellers here and then dumped a little bit. Took out buyers here, all in this area here. You got buyers. Buyers are taking out, you know, people went broke even, taking all the stops, and then price flushed up to the top again, taking out more sellers that got in here on this retest. So sellers, and then, you know, and overall these sellers here, right? And then price goes up. So taking out sellers and then more buyers come in right here, right? More buyers came in to push price higher, because people love buying at the high, right? More buyers came in, price took out buyers, flushed to the upside again. More buyers came in because this is like buyers. These weeks, buyers. More buyers came in here. I'll just use this whole area, right? More buyers came in here, and overall price looks to take out buyers and sellers, right? So like buyers were stopped out in this area here, and then price flushes to the upside. And then the same thing, sellers, liquidity, all the same shit really. Sellers were taken out, but price was looking to keep pushing. More sellers came in here, taken out, which is why price flushed down because all these sellers were no sellers in the market, right? No buyers in the market. So that's why prices flux like pushing so hard to the upside or downside because once it takes out the buyers or the sellers, then it'll flush in that direction that it took out. So like if it took out sellers and prices bearish, expect a flush after to the downside. So you want to be in two different times. You either want to be in to take out to target the sellers, or you want to be in on with that on the buys, or you want to be in on the sales that's taking out the buyers overall. Right. So like that's what Nez was talking about with targeting and identify buyers and sellers in the market. Um because like that goes back to with the wicks. That's why it's expected to get taken out because wicks identify in a way, in some form or fashion, your buyers and sellers, right? Um, yeah. So, um, I forgot where I was going with that. I just kind of started rambling, but so you said had tropes that caused price to go down, which that screwed me over on F15, right? Overall, I think it was just missing. Uh, I think on M5. Uh, yeah, I would say not recognizing this. Let me clean this up some. At least this area. So I think not recognizing this here or this here as a change of character on at least a 5 minute overall kind of screwed your analysis in a way for buys. Like overall, yes, I would expect, based off M15. Come in, tap into my POI, and oh wait, no, I'm sorry. You're tap into the POI 1, which you did get a reaction off of initially, and then POI 2, you did get a reaction here initially, which gives some kind of confirmation that you want to see um the initial rejection. So like taking those entries, I don't think is necessarily wrong. Because you did get at least those coaches and everything else before taking those entries. However, it's just, price on the lower time frame was more so just retesting after a break. So like I would just pay more attention to that as opposed to like how price is coming down, because you did, like, if you didn't on a 1 minute, right? So like if you didn't want to take sales to push price down into your intentional POI, which is understandable because that's technically counter trend at the moment. But here, even on the 1 minute, you got Choach here, Choach, and internal break, right? So with that is a bit more confirmation that I want to take price to the downside, that I want to start looking for sales, for sell opportunities, right? Especially after this internal break here. Uh, like after a 1 minute choke, not so significant, right? But after an internal break, no liquidity in that location is pretty valid, right? So like once I got this full break, internal break, which is your 5 minute choke, or potentially your 5 minute choke, then start looking into these areas here for price to tap back into, because price mitigated this before going down and then broke, gave you another internal fractal, and then came back into this zone here and then flushed, right? Taking out sellers and then flush. All right. So I think overall that minor thing that was missed led to those buys failing, because price had changed from bullish to bearish internally. So I would just be a bit more cautious and have to have you know double confirmation before entering those buys, because M5 choke pretty strong. Most of the time when you get M5 choke, it'll run in the intended direction. But after M15 choke, I would expect price to keep selling, or keep buying, depending on whichever side. Because the higher the choke, the stronger the change, right? So like if I get a 5 minute choke, then I'm looking at least for that M5 swing low to be taken, right? Or the M5 swing high to be taken. At least that's how I target it, right? Because M5 choke is your M1 change of character plus internal break normally. So getting that M5 choke is pretty significant on the lower time frame. But getting the M15 choke is M5 change of character plus internal break So that means that it's an M1. Technically, you could call it breaker structure if you want because of the size of the move. Um, but overall, that just keeps giving you stronger um bearish intentions, right? Or bullish intentions, depending on which way you're looking at the market. But the higher the choke, the stronger the choke. That's how I look at it. The higher time frame breaks always are going to be more significant to me than the lower time frame stuff that's going on. So like that's just kind of how I see it myself, and understand it to use the higher time frame um as a stronger confluence. And then you said, so now this is where I am unsure about things. Price is hitting 4 hour demand. Does that mean price go up? It can. It can. But normally if you have a higher time frame, change of character or internal breaker structure that's giving you overall, strong high, something that's going to push price back down. I would be more cautious on the entries coming back into those demand zones, right? Um, just for the simple fact that you don't know what price intentions is completely, right? So like um especially if you have a change of character, internal breaker structure, and all that good stuff, and then it's tapping into your demand. Yeah, it's a demand. Yes, is valid. However, it may give you a reaction that you can probably catch a play on the smaller time frame. However, um, the overall goal is for price to continue selling or buying. Um, excuse me, with that higher time frame change of character in play. Even if your demand zones are valid, um, you kind of want to go off of what price is doing and not what price has did, if that makes sense. And that's why I think Nez says a lot that you don't want to predict. You kind of want to react. Because if you go off of past history and just, okay, back in the demand zone, time to buy, or back in the supply zone, time to sell, and not really take into consideration what happened prior to coming into those supply or demand zones, like the choke or you know breaker structure, internal breaks. Price doing all the funky stuff before it comes back into your supplier demand. And if you have already double confirmation to the downside, but you know and you're only waiting for price to tap into something to push it back up, I would look for double confirmation to go back to the upside, if that makes sense. So like, because it kind of like, how do I explain? The way that I look at it is kind of like, price is it did, but now what is it doing? So like right now, yeah, it did break this high. It did. But now what am I expecting? Do I want price to just come back straight into the demand zone? If it does and buys up, cool. I'll wait for my confirmation, right? So like I'll get my change of character on 5 minute, which would give me the change of character and internal break to go to the upside, as opposed to tap and getting the choke and then entering on the retest. Because if you already had double, triple confirmation coming down that price was selling and buying off only a single confirmation or double if you want to consider tapping into the demand zone as a valid confirmation, which it kind of is, but at the same time, it's not in the sense of breaks and structure confirmation, what I was referring to with the double. So like it's a confluence, but it's not confirmation. That's how I would look at it. So like I would look for price to do, choke, internal break, and then enter. If price is coming down, if price is coming up, I would do the same thing, regardless of having a uh break of structure or internal break and all that stuff, right? So like I would what the hell? Um, so I would look for price to, it's kind of showing you what it wants to do, right? Before it gets there. Like if you get choked, internal break, and then you're kind of like, okay, well maybe price is looking to continue because these are essentially just continuations of downside price action, right? So I would need a double confirmation to take the price back to the upside, right? So like currently, if price right now, price created another internal break here, and then so you have chokes here on F15, but it was only to bring price back into this supply, and then price pushed back down. It's currently in this demand zone. However, uh, it's not looking very, you know. Let me look at this and see. Yeah, so even because you can on futures it's 24 hours. So like even with this, you can already see that price already broke that low, right? Because uh the ES is essentially the same as SPY and all that other shit. So like you can kind of use this for aftermarket, but you know, um so this low is weak. This is a weak low. So you expect it to fail because it failed to break the overall high that created it, right? So that's just kind of how I look at it. Like, yeah, Choach is good, but only for so good, right? Like Choach plus internal break plus the retest, take price back to the upside. But only Choach and a retest into a supply and come back down, this low failed to do its job, right? So it's a weak low. Expect price to break it overall. Even if it does pull back, then you have a weak high and a weak low. I would leave it alone until price chooses a side or, shows something additional when dealing with weak lows and weak highs. Um, all right. And then you said, so do I look into onto M15? There's liquidity at the bottom. I'm not really sure. I'm assuming you're talking about based off of your 4 hour. I'm assuming you're talking about this liquidity or this liquidity. I would honestly, I don't even mark up too much liquidity on the higher time frame, to be honest with you. Because this is so far away from current price action that this is not really a concern at the moment. It can be a target if you're looking for sales. I would target it, however, or this here. But I would not necessarily worry about it because it is on the higher time frame and is so far away from current price action. Like, you know, it might take a full day or so to even get to this point. But if I would use it more as a target, as a as opposed to a deterrent to taking buys because price can surely still come into this this demand here. My marker fucking up. All right, it could still come into this demand here, more refined on the 4 hour, and then take out this high because this high is still technically weak because it hasn't broken this overall low that created it, or this low that created it. But this low has liquidity, so you can look at it as a full break or not. Up to you once it gets there, if it gets there. But technically, price could still, come down deeper, feel some imbalance here, feel this imbalance here, you know, and then continue to do its thing. Feel this imbalance, tap into that demand, and then push back up to the upside. Price can very much do that, right? And it's the higher time frame, so it's like no telling. So like just based off of that in general, like I would still monitor for buys in these zones, right? Because these are valid demand because it did overall give you a breaking structure. So prices still technically swing bull, just internally bear, right? So you can still get that like just because price is doing all the selling here doesn't mean that price isn't still bullish. It's just looking to, maybe fill in the imbalance, maybe mitigate this demand zone, maybe come back down here. It's not much imbalance, but it's a small one, and then tap into like this zone here, or clean up, mitigate some of this wick demand down here, and then push back up. So it's like, you just gotta be reactive to what the lower time frame, because lower time frame show you, but the higher time frame confirm, right? Or higher time frame show you, and then lower time frame gives you your confirmation. Oh, well, I didn't. Your next question was, will price go to grab it and use the demand below to continue up or to go down? I think I kind of answered that with the last little breakdown. Yeah, 2.5 hours. I don't know if I'm gonna be able to send you this. I might have to do it through like email or some shit to keep it a buck. But I'm gonna try to send it. I think the file might be too large, so I might have to like upload it onto YouTube and send you the YouTube link or some shit. I did not think that it was gonna take this long, to be honest. But yeah. So hopefully it helps though. If you do watch the whole thing, hopefully it does help. And yeah, I think that answers all of the questions that you had. But yeah, based off of what you have on your 1 hour now, I would definitely say that would be. I don't know why this is labeled church. Maybe from, yeah, I don't know why that was labeled church. But technically, this is your 1 hour choke here instead of I mean, I guess you could call this internal break. I guess you can call it internal break here, but it would be like a internal break and then chokes. Boy, that's ugly. All right. So it would be more something like this: internal break, chokes. So internal break. I'm still iffy on this because it's like completely equal highs across the board, which makes sense of why price did what it did. But so you have internal break, and then you got your change of character right after. Price reacted to this breaker after that. So yes, this is a weak low here, like you said, weak low, and then imbalance here. So you got buy side imbalance, which is good. Looking for buys. So you got your buy side imbalance here and here. A little bit of liquidity here. Um, so with that, you have buyers still here, right? So I would expect price to do something like this, right? Um, for one, I don't like how fat this damn line is. So I would expect something like this. Like you said, either we open up and then tap into this demand here, come up, you know. Well, you want something more like this because in order to get a change of character, you would have to wait on at least on the 1 hour until something up here, right? So with that, what you I would want to look for is something like this. Break another pullback, break, tap into here, finally get into that demand choke, use this imbalance as an inverted imbalance, Reaper imbalance, whatever. Most likely create another buy side imbalance in this leg here, and then, push up there. So you can get a change of character, retest on your demand zone here. This would be ideal setup. But however, since there is liquidity and buyers in the market here, right? I would target, buyers. So it'll probably be something more along the lines of this here. Delete that. Break this low. Come in. Fill the imbalance. Give you a reaction off this demand zone because it is a valid demand because you had internal break here, change of character, internal break. so on and so forth, right? And then overall break structure, which this pullback is responsible for breaking this leg of price action, right? So like with that being said, it's still valid. So I would look for some kind of reaction. So like overall, price will probably come in here, tap into this, um, pull back into this huge supply, which is kind of like a what do you call it? Entry model 8, right? Because, you know, excessive candle to the upside, and then you had price close below that excessive candle. If price closes below this excessive candle, not even the entire low. Yes, this low is weak, but it's still kind of like, entry model 8 on the higher time frame, right? The same thing with this here. So like price closed below this excessive candle to the upside, and then you have entry model 8 on your higher time frame. Using this whole area, price came back in, tapped into this supply, and then came back to the downside for entry model 8. So it's kind of like the same thing. I try to look for entry models on the higher time frame, and then or potential entry models on the higher time frame, and then find my entry on the pullback when it occurs on the lower time frame, if that makes sense. So like for this one, for instance, I already identified that this is an excessive bullish candle, right? And then price closes below, so I would mark a line below this candle. And if price closes below, I'm looking on the lower time frame to for price to come back into this overall supply zone and give me confirmation to take price back to the downside, right? Because that would be entry model 8 on the higher time frame, but on the lower time frame, entry model 8 is more immediate, but on the higher time frame, it takes more time, right? Because it takes more time to form those candles. So but on the lower time frame, it doesn't take as much time to form those entry models. So like if you were swinging, like for instance, like right here in this area, um, this would be a good swing entry if you were just using the higher time frame as your entry uh time frame, right? So like you had this excessive candle to the downside, price closed above this candle here, and then now you have this entire area here, which is technically like your entry model 8. Let me so like this right here, um, so like this technically is like entry model 8 on the higher time frame, right? So like price closed above this high, so price closed above this high, right? And then it came back, tapped into this order block, and then took off to the upside. So like that's what I mean by entry model 8 on the higher time frame. But like this happened, it formed, but it's still like what, 12 hours? That's not right. So like 4 hours, right? So like 4 hours it took for it to actually come back down, tap in, and then shoot up, right? So like that's what I mean. Like the higher time frame will kind of show you the move before it happens, but then you're just looking for your entry on the lower time frame based off the entry on the higher time frame, right? So all right, so that's one thing. But like so the second thing, like you said, I would expect for price to take out these buyers here. So, something like take this low, you're gonna get a reaction here 9 times out of 10 because it is a valid demand zone. So it could push price up or it could just push price back up into here to give you that full, entry model 8, entry on the higher time frame, and then come down into here and then buy up. But you still have to be careful because, this here is still, valid structure for sales, right? Because you're gonna have a this low is broken, right? So now you have a strong high. I can't really. I have to delete some of this crap up here to see if it's equal highs or not. But it may not be. It may be. Who knows? Um, but like, so you have this here, right? So once price breaks this low, it's going to create a protected high somewhere in this area, right? So with that being said, to continue looking for buys is kind of I would want some double confirmation, right? Or at least change a character on the higher time frame, like 15, 1 hour, you know, something stronger than the 5 minute or whatever the case may be to that's going to signify prices looking to go higher as opposed to you already have this internal breaker structure here from this weak low that's probably going to get broken, and then you just got retest and mitigation, and then another uh tap into this demand after this if this imbalance pushes price up. So now you have another protected high. So like I would be cautious, right? Just depending on how price forms, because you have another protected high and then internal breaker structure. So like price could get faked out here, and this just be a smart money trap that they call it, and just tap back into here and then continue, mitigation, and then another break, mitigation, then continuation, right? And then tap into this imbalance, give you another mitigation and continuation to get down into here. So now you're taking out all these buyers, taking out liquidity. Now you're back into this zone, which is kind of already mitigated in a way, right? So it's iffy, right? So since the zone has been mitigated already, and then you also have this this liquidity or equal lows that form along this area. So like this is buyers in the market, right? Because price broke structure, and then you got retail buyers that are coming in after the break because that's what they do, and then have those big ass stop losses because they buy in at the break or the breakout or whatever. So it's a bunch of stop losses in this area, and I just fucked that all up. So it's a bunch of stop losses in this area in general, right? And from my understanding, price hunt stop losses, right? So like people don't, the market doesn't want people to make money, and like it's setups like this which cause those what they call those smart money traps, because even if you aren't doing retail bullshit like trading the breakouts and all that stuff, which is like 50-50 and whatnot, I would expect price to fail and continue selling at this point, with also having in consideration that this is a huge imbalance that price needs to fill. Really, because price already mitigated this, so anything below this imbalance is kind of mitigated already. Everything below here is mitigated. This is mitigated. Oh, that's not a straight line. But like this demand zone is mitigated. This demand zone has been mitigated. This demand zone has been mitigated. So like there's nothing below this imbalance. This demand zone has been mitigated. Oh no, it hasn't. This hasn't. This area here hasn't been mitigated. And it still could be a valid demand zone. Yeah, it hasn't been tapped in. So yeah, I mean, that is what overall could happen is price could come down into here, sweep liquidity, tap into this unmitigated zone, and shoot up, or tap into, sorry, tap into this, feel this imbalance some, either all or just 50%, and then shoot back up. But because everything else is already mitigated below, right? All of this shit is mitigated. The only thing that could really, you could use breakers, your breaker levels for buys, possibly, but those are not as strong. They are stronger. So I will say that breakers plus imbalance equals cha-ching. So like breakers plus imbalance normally are a lot stronger buy or sell areas as opposed to areas with just imbalance or areas with just breakers, you know. Um and that you can see, like, if you look back on normally on the lower time frames kinda, or if yeah, normally on the lower time frames where you have a nice push up or a nice push down, you can see like there is a breaker in this area and also imbalance here. Like there's a breaker plus imbalance and price shot up based off of that. So like those are stronger buy and sell areas for sure, from my understanding, but you know, it's all 50-50. I would just base it off of what price is doing as opposed to, trying to predict, yeah. But yeah, I'm gonna end it there. Probably way too long to send to you at this point. But I'm gonna give it a shot, and then if not, uh I'll go from there. All right. Hopefully it helped. Hopefully it was